Hello, hello. We are now live. Let me make sure we got all the places going right. Happy Thursday. It's Thursday, yep. Welcome to today's Lunch and Learn with Purse Strings. The month of February, we're talking about all things divorce. And so, we'd like to bring different topics every month to help women really be what we like to say is financially fearless. So we want to bring our professionals on who have expertise in these areas, who have specializations, and we call these professionals our Purse Strings approved professionals. Mihealla is one of them and has a CDLP. So we're going to dive into what that means and more about the marital home during divorce. And so before we dive into all of that, Mihealla, could you give a little intro of who you are and what you do?
Yes. Hi, Maggie. Thank you so much for having me here. My name is Mihealla Bayla. I am an attorney and a certified divorce lending professional and co-founder of True Lending Company in Washington State.
Awesome. Well, we're so excited to have you on today to talk about, you have your CDLP, which we're going to dive into. And anyone who's watching live, please feel free to throw in any questions in the chat. We're happy to help answer them. And if you are watching as the replay, we're still happy to help, take care of those questions. Just pop them in the chat. So your job title, what does that really mean, the CDLP?
Sure. Well, so I am an attorney and a CDLP, which is a certified divorce lending professional. And that is a certification that you obtain through the Divorce Lending Association that has pretty rigorous training and testing and required ongoing training to make sure that we really understand our craft, which is this very specific intersection between family law, tax law, financial planning, and then very specific lending programs that are only applicable to folks going through a divorce for a very, very specific amount of time. So yeah, to kind of put it in layman's terms, what I do is I help clients who are going through a divorce first identify what their housing goals are. Everyone's different. Some people want to keep the house when they're going through a divorce, and some just want to sell and split the proceeds. So depending on their goals, I create a roadmap of all the steps that need to happen during the divorce to help them get there, to help them get to their goals at the end of the process. And we start with things like income, assets, and marital debt and how that's going to be divided. And then I create this roadmap for them with all the steps that need to happen, all the potential landmines that barriers that might take place that they can avoid. And then I review I can review the wording of their final divorce documents to make sure that it is consistent with the lending guidelines so that once the divorce is done and they go to try to get a mortgage, they don't end up having really costly surprises because there was some type of term in the divorce document that will make them ineligible for that mortgage.
That's so interesting to really even get down to that verbiage in your divorce decree to figure out, how the home and how all of that is going to work together. Why did you decide to specialize in divorce mortgage planning?
A long answer, and I'll give you both. The short answer is in the US, most of us, so really 2/3 of us, our biggest asset is our home. And with divorce rate being what it is and around the 50% mark, dividing the home and figuring out financing options for the home is a really big part of the divorce process.
Yeah.
And in addition to that, for me, what's really important the reason I do this work is because I want everyone to have a safe and affordable place to live when the divorce is done. Everyone deserves that. And it is a very relevant part of the divorce process to make sure that at the end they are whole and complete and can live in a safe place.
Yeah.
So that's the short answer. The long answer is that I grew up with a single mom. And I saw firsthand the sacrifices and the challenges that she encountered. And it's not just single moms, it's single dads too, single parents. Right. They really have a soft spot in my heart because their needs are often a little bit different than the needs of the two parent households. And in addition to that, and kind of what brought me to this. So up until about 2019, I was a practicing attorney in the field of tax law and elder law, and I have been practicing since 2007. But at that time, I was starting to get burnt out of my law practice. It was a lot and a lot of hours, and it just happened that I decided to take a break and really evaluate what I wanted to do, what my next steps would be, if I wanted to switch fields, practice areas. And at that time, my husband, who was a mortgage broker, he had the chance to open his own brokerage.
Oh, wow.
And he knew that I really liked processes, systems and processes, creating efficiencies. And he asked me if I would come on board with him and help him launch this company and create the systems and processes for him, train the people, create the manuals. And then at the end of the year, basically hire myself out and go back to the practice of law. So I agreed. It was really exciting to have this new project and to work together, which we really like to do. So initially, my business consisted of managing, like I said, doing the procedure and hiring and all the HR duties. But really quickly in 2019, the refinance boom hit. And before I knew it, I was really just elbow deep and working on loans and having to learn loans and getting licensed as a loan originator. And while I was doing this work, I started noticing a pattern. I started noticing single moms, single dads that were coming out of a divorce and needing financing, and seeing the struggles they were coming up with and realize these struggles were really preventable.
Yeah.
One very simple example for lending, Maggie, is that if we wanted to use support income such as alimony or child support, we need, for conventional loans, we need to establish that that support has been received for 6 months. And then from that point forward, it's going to continue for another 36 months, which means that we need that support income to be awarded for a minimum of 42 months, or else we're not able to count it as qualifying income for mortgages. So with that, keeping that in mind, I just want to tell you a story to kind of give you an example of what I'm talking about. And I'm going to talk about a client who I'm going to call Alice. Okay, so Alice was newly divorced, and she had young kids and really wanted to keep them in the home. She felt that moving them, especially with all the other changes that were happening, would have been just too much of a shock for them and not good for their development, and wanted to keep them in the marital home. And she was receiving a pretty hefty amount per month in alimony payments and had some child support according to state law. But even with all this, because the alimony is only awarded for 3 years total, which is pretty standard, 36 months, we could not use her alimony to help her qualify for a mortgage. And she took on a part-time job to make ends meet and had this child support, like I said. But without the alimony payment, she simply did not qualify for a mortgage to be able to refinance the house into her name. So she had, within the divorce decree, that she had an ultimatum. She had to refinance the house within 6 months or else sell it. Well, there was no way that she would qualify for that mortgage within 6 months. And I had to have that conversation with her and explain. And it was such a heartbreaking conversation to tell this mom, who really just wanted what was best for her kids, that she would have to sell the house and move. And it was such a difficult situation that after meeting her, I wondered if her case would have been different if she knew the details of what the support income would have needed to be for her to qualify for a mortgage. If someone sat down with her, I'm sorry?
She only needed 6 more months, correct?
Yes. But because no one explained that to her, and she didn't know to ask that from the divorce. So I just started wondering if there's a different way, and started seeking out information about lending guidelines. And then, are you familiar with frequency bias? Frequency bias kicked in for me. Basically, that means that whatever you think about, you start seeing more and more of it around you. So I started seeing these stories of divorcing clients all over the place, and then finding out, what can we do to help them? And that's how I discovered the Divorce Lending Association and found out about their certification, the Certified Divorce Lending Professional. And this journey really just became a passion. It took over because I felt like I was making such an impact for clients, where really there's such few of us who do this work, that I've decided to go at it 100%. I've sold my law practice joined forces with my husband. We actually launched our own mortgage company. It's called True Lending. And what's different about True Lending is that we have this department, which is me and my staff, who specialize in divorce mortgage planning full time. That's all I do. I don't, my husband and the rest of the team, they work on regular residential lending, and they're fantastic. But I focus on individuals who are going through a divorce, hoping to get in there early so I can help with the planning process so that they know when they're going through a divorce what they need to ask for to make sure they can meet their goals at the end of the divorce.
I think it's so interesting because so many people we talk to don't understand why you need a whole team. We say, oh, a team when you go through divorce, and a team can sound expensive and things like that. But there are such little nuances that you need written that maybe the attorney doesn't know, or your financial advisor doesn't know, that, you know, if you had that spousal support for 6 more months, it really would have helped you get a home, or these little nuances. And that's why you do need a team of people who specialize, you know, specifically with divorcing and getting a mortgage and things like that. So
absolutely.
You know, how does your process kind of differ from a regular mortgage loan originator?
So my process differs. First of all, like I've mentioned, there is this additional training and knowledge where we understand the timing of what needs to happen when. But in addition to that, my process of working with clients is so unique, and they have so much specialized attention where every plan is really catered to them. And to give you an example, I start with what are their goals at the end of a divorce, because everyone's different. And also, what is their budget? Just because someone can qualify for a mortgage of a certain amount doesn't mean that that's the best mortgage for them. You have to still account for everything else that happens in their life as a single parent, especially. Do they have childcare costs that they need to account for? Do they have extra activities for the kids that they have to budget in? So we sort of figure out what that nut is before we go forward. But once we have that goal identified, I go in through I complete a very, very thorough report for my client and for their divorce team. I start with where they are in the divorce process. What are the deadlines? Do they have a mediation tomorrow, or we need to have this report ready by tonight? Or is that in a month from now, where we have time to really go into the details? I look at the property. Are there any issues with the title of the property, any clouds on title that need to be clear before this refinance can take over, before the property can be sold, so that it can be addressed while while they're still married and they have both spouses' cooperation. I look at the income. Do we need to create income? Do we have enough income? Does it have to be stated in any specific way? The same for assets. Do assets need to be divided in such a way where we help one or both spouses make sure they're in a qualifying position? And then marital debts, that is a huge area, because debts can really affect a person's qualifications for lending, including student loans. If a parent is a co-signer for a kid's student loan, even if that loan hasn't entered the repayment period, or maybe in forbearance or deferment, unless they're in a very official payment plan that lists the payment amount every month, we have to impute a 1% of the balance payment amount. So let's say a kid is in grad school and they have outstanding loans for $150,000, and they're not in a payment plan, they're still in school. But we have to basically add a student loan payment of $1,500 to that co-parent against their debt to income ratio, which really affects their qualifications. So all of those issues are really important for us to dive into and make sure that all the parties know that this is important, it has to be addressed. And then I prepared this very, very detailed report and narrative where I go through all the options and what it takes for them to achieve each option. The next step is I meet with them again, explain the information, and then we start to narrow down what our options are. And once we have an actual plan, then I create the steps of what needs to happen for them to get to that goal line. And I share that with their attorney, mediator, whoever's on their divorce team, so that we're all on the same page.
I love that. And so is it typical that you meet with both partners to start, or the one who wants to just keep the house, or who do do you need both people there?
I can meet both people at the same time. However, I found that they generally like to meet separately.
Yeah.
So in divorce processes such as collaborative or mediation, those they're a lot more amicable. I'm able to help both spouses, and there's often a benefit to that because we can find creative solutions that benefit both spouses. Uh, Let me give you an example. There's a couple that I worked with recently where the wife needed a certain amount to be able to refinance the house into her name, but it turned out because alimony is a non-taxable source of income, we can gross it up, and professionals in this industry who are really familiar with divorce know this.
Yeah.
And so for her, she needed 1850 additional income from alimony to qualify for her refinance. Well, she really only needed 1500 of alimony payments because the rest would be grossed up. And then on the husband side, the paying spouse, and it's not always the husband paying, but that's just what happened in this case. For him, we're actually able to deduct the alimony payment from the income instead of listing it as a liability, which also improves his debt to income ratio. And so we found a solution that they were both really happy with because they could make so much more work with less of an impact on their finances. And it was a result where both spouses got what they wanted.
We love a win-win situation. That's wonderful. Um, and so how does your process how is it different than the regular, mortgage professional? How is it different than working with a regular mortgage professional?
It's exactly that. So with my clients, I spend an average of 5 hours for each of my cases for the planning. And I work with them during the divorce process. A lot of mortgage loan originators out there, they're just not trained. This is not something that they have the knowledge and experience to know to get in there and help with the planning. Because of the CDLP training and experience that I've had, I can work with their attorneys and with them through the process to make sure that this planning takes place, that this report is created before they go into the negotiations process so that they know what to ask for.
Yeah.
And then there is no cost to any of the work that I do. So even though we do spend an average of 5 hours per client to make sure we create the planning and we assist them through the process, there is no obligation and there is no cost. The hope is that if they like what I do and they trust me and they see the resource that I'm able to be for them and see the what I'm able to do that's different than what a typical lender will provide, the hope is that they'll want to use me and my mortgage company for any loan that they need to secure out of the divorce.
And that's something huge I want to highlight is because, again, people think divorce team sounds expensive. You're going to be working with me for 5 hours. How much is that going to cost? But really, it costs them nothing. You put in your services, and if they do decide to go through and, get the mortgage or refinance, then you get paid from the mortgage.
The lender pays me. Oh,
sorry, it froze for a minute.
Exactly. There is no fee that is ever charged directly to the client. We get paid through the process, but it isn't a cost that's ever directly linked to the client.
Which is huge. And I want to make sure women know that, just because I don't want them to stop themselves to think, oh, well, it's going to cost me X, Y, and Z, because it won't. It'll probably, make the best of your situation, which is, really exciting. And I think, super great. You might as well have someone who can really help you and know, that unique situation versus just, throwing it with any mortgage professional and just hoping it works.
Exactly. Yeah.
And so, let me see what other questions we might have coming through. Is there any information that we haven't touched on that you want to make sure we touch on today?
I do want to give you another example because I feel like giving actual examples of clients that I've helped really illustrates the work that I do. So when I explained that the part about income and why it's so important to have us come in really early on. And by the way, I work both with clients on their own who are going through divorce who need this planning, but I also help and support a lot of attorneys,
Mm.
certified divorce financial analysts, and mediators. And I am licensed to do this work. I'm based in Washington, so here's my home base. But I'm also able to help, in addition to Washington, in California, Colorado, and North Carolina. And so, one example of doing this planning in advance is that certain options are only available for a very limited amount of time. One
Mm.
example of that is certain income streams. This wouldn't be the first option, but if there's no option available, let me give you an example of what I mean by that. I was working with a client and only with the wife who was a single mom. She had been a stay-at-home mom for many years, and they were going through a divorce where the tensions between them were escalating, and she needed to move out, and it was not there was no way that she could wait until the divorce was final and then wait for the alimony and the child support to season, meaning to have 6 months of income
Yeah.
that she was receiving before she can qualify for a home. The rental market was really limited, especially in the area where she was. And if she moved, she needed to sign a 1 year lease or more. And she really wanted to know, is there an option where I can just purchase something right away?
Yeah.
And she asked around, and everybody said, no, her name is Sandy. No, Sandy, you're going to have to wait for the 6 months for the alimony and child support to season before you can be in that position. Well, I happen to know that they were selling an investment property and they have funds coming through from that sale. But typically when you have funds in the bank, it doesn't help you necessarily qualify for a mortgage unless it's a really high amount and it's a special type of loan. But that wasn't the case here. However, for her, because of the planning that we're able to come in, we actually created an income through a trust
Oh.
where we didn't have to wait the 6 months, and we had her pre-approved, and she was out there trying to buy, looking for a house while the divorce was still pending. Found a property, made an offer, the offer was accepted. We went into processing. Her divorce was finalized, and I don't remember the dates, but it was maybe the 25th of the month. And then she got the keys to her new house on the 28th of the same month.
Wow.
So no, she didn't have to wait the 6 months to be in qualifying position, then to make an offer on a place and then negotiate. We were able to get it done instantly. And she moved out of the house and was able to avoid those tension escalating and putting the kids through that, where a typical lender may not know what needs to be done and how to do it to make that happen.
How exciting to help make someone's, safety and their dreams come just to reality so quickly, and to be able to, everyone says no, but there's always a way. There's always a way. You just have to find the
Absolutely.
right people. And there was an option, which sounds so exciting, just to be able to really help them and get them out of that situation and really on to their next best life.
Absolutely. And this is why I really believe that divorce mortgage planning must be included in the
Yeah.
divorce process,
Like
because having a safe place to live matters.
Yeah.
And
Like
you're
you said at the
done.
begin like you said at
Go
the
ahead.
beginning, it's one of the biggest purchases you'll probably make in your life.
Mhm.
And so maybe one of the biggest sales as well. So you need some trusted people in that process.
Exactly. Absolutely.
Awesome. If anyone tuning in has any last questions, I'm happy to answer. Let me just see if there are any, but I feel like this has been a ton of great information. I guess my last question for you is, do you start with I guess I should have done this at the beginning, but do you start with the conversation of kind of the pros and the cons of keeping your marital home, or do you just and talk through that first when going through the budget and things like that? Because I know a lot of people debate, should they even keep it?
It's actually included in my report. That's a really good question, because for me, I'm a numbers person, and this is how I'm able to relate and explain
Yeah.
and give my information to the person that I'm helping. So I create this report where I show them, this is what it looks like if you keep the home. These are the numbers that you can expect to be paying.
Yeah.
And here, if you want to sell or if you want to whatever other option there is, this is what it's going to look like. So those figures are really broken down into graphs in my report, and they're very detailed. And then depending on what options they would like for me to compare, I can go from there. It's very, very specialized to their needs.
I love that, because it's very typical with women to want to keep the house and keep the family in the house. But as we know, houses are very expensive. And so you can't just pull $5,000 out of the window or something like that if you need cash. And so, upkeep, taxes, electric,
Exactly.
gas, all that stuff, it really does add up, which is easy to miss. Or, not think about all those different things, landscaping, shoveling, all those things.
Absolutely.
And I know, yeah, I mean, if it's not one thing, it's another. And so I know it seems like a great idea to start, but sometimes keeping the house is not even the best idea. But I love that you do that whole analysis before you even dive in any deeper to really make that decision, both out of, your feelings, but out of numbers as well. And what are the facts?
This is one of the questions that we go into very detailed when we talk about goals, because as I mentioned in the beginning, just because they qualify on paper for a mortgage payment doesn't mean that that's what they can afford in reality, because you have all these extra costs that you mentioned, and childcare costs and anything else that maybe they would like to go out to eat once a month or once a week, and they don't want to have to eat ramen for the life of the loan. So all these have to be taken into consideration, and making sure that that financial decision is a really well-made decision, and that they'll be able to sustain that financial obligation long-term.
And there was a different story from a different professional I was talking to, who was talking with, their client about the client's goals. And her goal was wanting to be able to travel, in retirement every month or something, and all this stuff. And so she's like, why do you want such a big house if you want to travel? Like, you're not going to be in the house. You don't want to maintenance the house. And finally, after sitting through it, she's like, you're right. I don't want the house, I'm going to be traveling. I'd rather put my money there. So like, what is the big goal? What's the big goal at the end of the day? Not just, I want to keep my family here, but like, I want to travel monthly. All right, let's use those house funds and don't have extra 4 bedrooms, but let's get you in a smaller house and get you traveling, whatever your dream is. I know you guys help make it happen.
Absolutely. Yeah, it's about helping the client get what they want and what they need.
I love that. I feel like we've covered a ton of great information. We always like to share that, you are one of our Purse Strings approved professionals, so people can check you out on our site, pursestrings.co. Your email has also been going through the bottom here. Is there any other way you'd like people to reach out to you?
Absolutely. You can look at our website. The company is called True Lending Company. The website is truelendingco.com, and /divorce will take you straight to our divorce specific page. I'm on LinkedIn under Mihealla Bayla. And yeah, the email and phone number is 425-222-2000.
Awesome. Awesome. Well, thank you again for coming on and sharing your expertise with us. It's been really helpful in learning more about this process. So I'm glad people can have people like you on their divorce team. So if you need somebody, reach out, start the conversation. Like she said, it's free, so you might as well. And we'll be back here again next week with another conversation about divorce. But let's jump in and get started if that's what you're going to do.
Thank you so much, Maggie. I really appreciate your time, and thank you for having me here.
Of course. We'll talk to everyone soon. Bye.
Bye-bye.